Hello, dear colleagues. Today I would like you to present the solution for such exercises as exercise 3.7 and problem 3.1. Let's start from the first exercise, is 3.7. Let's see. We have the exercise with income statement. So our company is Weatherspoon Shoe, and we have some following information about records income statement for year December 31, 2025, for the ended year. Okay, and below it we have some table with information like rent revenue, expenses, administrative costs, net sales, losses, dividends, and so on. Below the table, we have additional information that there were 20,000 ordinary shares outstanding during the year, and the same extra instruction for this exercise. So the A is to prepare comprehensive income statement using combined statement approach. We know what is income statement. Income statement is one of the main financial statements which shows us the main information about company's revenue, costs, expenses, and the most important, net income. So net income, by the easiest way of explanation, it sounds like a real money without real earned money without any expenses and taxes. And using combined comprehensive income statement, it's a income statement which is consist of the, as I said before, revenue costs, uh, also detailed explanation of all expenses. For example, in our case, it might be selling expenses, operating expense, other income expenses, other income and other expenses, and so on. Okay, and after it, we have the main part of comprehensive income. It's unrealized gain or unrealized loss. Unrealized gain or unrealized loss, which shows us that our companies, by the tough way, uh, price was changed, but not by us as a working uh, as a worker who do the day by day working processes, which is shows in the income statement, but also our comprehensive income statement depends on the cases as changes in exchange rates or some changes in shares. And the combined statement approach means that in one comprehensive income statement, we will have the all main points in one statement. Okay, and the requirement B, prepare comprehensive income statement using two-statement approach. So it means that we will have two statements, but they are so useful in making some analysis of income statement for the third parties or for the people who will analyze our income statement. So, for example, we will have the same information. So it isn't like that we have completely different numbers, but we just have the simplest way for understanding for the third party. I will explain it more detailed way during the solution. And the third one, C, which format do you prefer, and discuss. Okay, let's start from the A, prepare comprehensive income statement using combined statement approach. Okay, you can see my Excel file, and on the left corner, you can see this exercise, and let's start. Okay, firstly, we should remember that before starting any financial statement, we should write the name of the company whose statement it is. So it's whether uh, shoe company. After the name company, we should write the name of financial statement. In our case, it's comprehensive income statement. Okay. And the last but not least important is the period of our comprehensive income statement. So you can see here that for the year ended December 31, 2025. So we must write it for the year ended December 31, 2025. Okay. And I would like to start my comprehensive income statement. For the easiest way of understanding for you, I would like to write additional words by myself. So firstly, it's a name. Secondly, it's amount, and thirdly, uh, how be for example, total. Okay. So by the name, I mean names of the streams. For example, net sales, costs, expenses, and so on. Amount mean the amount, the real amount from the table in the exercise, and totals means totals of these numbers. For example, we have selling expense, we have administrative expense, and the total of it is our operating expense, something like that. Okay, I will show it to you. Firstly, as we all remember, we should start from the net sales. We can see on the left corner that our net sales is 980,000. Okay, the name is net sales. Net sales means how did we earn, but this net sales included some expenses, include costs, and so on. So from expenses, we will decrease them. Okay, total 180,000. After net sales, usually we have costs. So costs is cost of goods sold. It means that the cost of producing our products, for example. Okay, and do we have it? The cost of goods sold 516,000. Five is 516,000. But also we should remember that our cost is negative because it's our it's our cost. And after it we have those. So we should find out the real money which we earn without the cost. So we just have our net sales and minus cost. It's our gross profit. So after gross profit, we should remember that it's not our also it's not our real profit because also inside we have some expenses which we also should decrease. So you can see that we have selling expenses and administrative expenses. So we can generalize it, but some operating expenses. Okay, operating or just expenses. Expenses, and we have selling expenses and administrative expenses. So expenses, it's something that we required to pay for our working processes. For example, selling expenses, it might be rent or something like that, which is required for making this money, for earning this money. And administrative expenses might be some requirement payments for administration. For example, management or something like that. Okay, we have that our selling expenses is 140. And administrative expenses 181,000. And total expenses equal to, so we can use the formula in Excel like sum and just include the selling and administrative expenses. However, I have the Russian version of Excel, so I just use sum. It works the same. Include these two cells and close the brackets. So 321. It is the total of our operating expenses. Okay. After operating expenses, we have other income and expenses. Other other income and expenses. Okay. Other income and expenses. So let's find out. We have some rent revenue. So rent revenue, it is not included in our net sales in beginning because uh, our company's main business process is not renting. So we are making products or we are selling something, but we are not making profit by rent something. So it's other income and expenses. So let's write it below. Rent revenue. Rent revenue 29,000. 29,000. Okay. And other expenses. Other expenses, it might be uh, loss on sale of plant assets. Loss on sale of plant assets. So this loss is not included in the working process. Like we do not have such losses day by day. So we should show it a little bit below by making it more visible for the third party people who will look and read our comprehensive income statement. Okay, it is minus 15,000. Minus 15,000 because it's a loss. Okay, and the total of other income and expenses. Okay, equal to rent revenue minus loss. 14,000. Okay, 14,000. Uh, so after that we have um what do we have? Okay. Interest expense. But before making any interest expense, we should. Mhm. Okay. Administrative income tax, rent revenue. Um, Where is interest expense? Okay. And our income from operating is, so we should equal to uh, gross profit minus total expenses plus total income and expenses. So it's our income from operating 57,000. Mm, like this. Okay, and after that we can find the interest expense. Interest expense. So our interest expense is 18,000. Interest expense means the interest or percentage of these expenses. So we do not need to calculate it because we have the ready number of it. 18,000. 18,000. And after that, we can calculate the income before income tax. So we find out that our income from operating is 157,000. Our interest expense is 18,000. And income before income tax, we just should use the formula that we have income from operating minus interest expense, and we'll get income before income tax. It's our income, but without decreasing by taxes. So right now we should decrease it by the income tax, which we also have in this exercise. Income tax 13,600. In income tax 13,600. But we should remember that income tax it's have the negative sign. So our net income, our final net income is equal to income before income tax minus income tax. So it's our real net income. Okay, the answer is partially ready. However, we should remember that we have not usual income statement, but we have comprehensive income statement. So what is the comprehensive part of it? So the comprehensive part of it is that we have other comprehensive income, namely, we have unrealized gain on non-trading equity securities net on tax. So we have the gain or some earnings or some money, but we didn't work as usual company. So we got this money, but not by the main working processes as usual. Okay, let's write it. Other comprehensive income. So comprehensive income might be the all losses or gains or some money, like roughly money, if I would explain it by the easiest way for every student. But we didn't get it by the usual working day or usual working process. So um, it might be conducted by some shares or changes in exchange rates and so on. Okay, and the name of it, unrealized gain on Non-trading. I just write the old name from it. Non-trading equity and so on. Okay. Just usual name of it from the exercise. And it is 31,000. 31,000. It's the ready number with a positive sign because it's a gain. Gain plus. We win some money, something like that. Okay, and after that, we can get our comprehensive income. Comprehensive income. So it is sum of net income plus unrealized gain. Gain. Why plus? Because it's gain. If we had not gain but loss, we just need to minus it. Okay, and our final answer is 139,400. I hope this is readable. However, also we have additional information that there are 20,000 ordinary shares outstanding during the year. So it means that we can find the number of one share of this comprehensive income. So we should get the name earn per share. So it's usual formula, just comprehensive income divide by the number of shares, 20,000. 20,000 because we have this below the table. So, and it's divided by 6.19 thousand. Okay. Oh no, we need not comprehensive income. I'm sorry. We need just income. Why not comprehensive income? Because our price of shares depends on the real net income. Okay. So the first part is ready. Second part, prepare comprehensive income statement using two-statement approach. Okay, let's start. Two-statement approach. It might be a little bit similar to the first one. Firstly, we should start with the name of the company, also the name of financial statement, but in our case, it's not comprehensive income statement, but just usual income statement, and the period for the year ending December 31. I just click on the Control C and Control V. Okay. After that, I just also copy this similar table, like here. So, net sales 980,000 as in the previous table. COGS 516,000. Gross profit is 465,000. Operating expenses or just expenses is selling expenses, administrative expenses, got similar numbers. The total expenses 321. Also, we have other income expenses, rent revenue, lost on sale. Also, the sum of rent revenue and loss is 14,000. Income from operating expenses. Uh, yes, it is included. Interest expense, income tax. We just need to state like this. Income statement, net income, and that's all. We do not need this information about other comprehensive income like unrealized gain or not grading, not comprehensive income, because it is not included in the income statement. So it is the main difference between these two statements. And for example, we also can make the second comprehensive income statement the statement two approach, like here, two statement approach. So this was the first statement approach, and the second one. Also, we have with the comprehensive income statement for the year, we have similar information like this, but in this case, we have net sales, not net, oh, I'm sorry, we don't have net sales, we just have the result of net income. I just Control C it, copy it, and Control V. Copy, copy. No, yeah, just do like this. We have net income, also other comprehensive income, like unrealized gain or non-trading. From the first table, we just need to combine it for a better view of our third party, for the better understanding of it. And comprehensive income is equal to the sum of net income plus comprehensive income. Okay, we have similar numbers, similar words of it, and so on. So we should answer on the third question, which format do you prefer? Personally, I prefer the first comprehensive income statement because for me it's more convenient in understanding the general data about the company. So I can see the all numbers and all parts of it in one table. So I can see that I have net sales, gross margin, expenses. Also, I can see the other comprehensive income, unrealized gain. It's more detailed way, but in one place. But at the same time, if we look on the second method as comprehensive income using two statement approaches, we have similar data, but it is not general, and we have two different tables, which is personally for me it's not convenient for reading as a third party who has never seen these statements before. And let's look on the last problem. It's problem 3.1. So there we should look on the financial statement classification. And for each transaction or account title, enter as paid provided a letter. So right here we have statement of comprehensive income, retained earnings statements, the titles of it, and on the right side we have definitions. For example, unrealized holding loss, sales revenue, and so on. So we should combine two of these tables. Okay, let's start. So the first one, unrealized unrealized holding loss on non-trading equity securities. Okay, unrealized means that we haven't sold the investment yet. So the loss exists only on paper. And non-trading is when we plan to hold it for a long time and not to sell it right now. And then answer is E, other comprehensive income, because it is the part of income, but at the same time, at the same name, is especially for not realized yet. Okay, secondly, gain on sale of non-trading equity security. It's opposite from the previous term because we actually sold investment and the gain in realized. But it's not the main company operation, for example, as selling or producing. So the answer is C, other income or expense, because it's not the main purpose of our business. Gain on sale, non-trading equity. It's not the main purpose of the business. We do not do it day by day purposely. Okay, the third one is sales revenue. Sales revenue it is the money which is earned by the main company processes. So the answer is revenue A. Fourth one, loss on impairment of goodwill. Loss on impairment it's intangible asset, and impairment when the value of asset is decreased. So the answer is C. Because we don't have losses of assets on daily basis. The fifth one, sales salaries accrued. Salaries earned by company's worker. So it's operating expense. It's B. Operating expense because it's regular payments to our workers for their work. So it is the salary expense. Six. Net income for period. The final profit from income statement, something like revenue minus expenses. So the answer is G. Additions to retained earnings. Because profit gets added to company saving account. Seventh, loss on sale of investment. So it means that we sold investment for less price and it's realized loss. So the answer is C, other income or expense, because it's loss, but not from the main operations, not from the main processes of the business. 8.1. Depreciation on equipment used in operations. It's systematic allocation of cost equipment over useful life. So it's operating expense. Ninth one, cash dividends declared and paid. Um, it's money company give to shareholders from company profit. So the answer is H. Deduction from retained earnings, because dividends are not expenses and it's profit distribution between our shareholders. 10th one, correction of error due to expensing the cost of equipment in previous years. So it's mistake from past year that has been fixed right now, and the answer is F, addition or deduction from beginning balance. because we don't change old income statement. So we need to adjust opening balance of current year, namely retained earnings, to make corrections. 11th one, insurance gain on flood loss. Insurance proceeds exceed the carrying amount of asset destroyed. So the company had flood, and insurance paid more than value of damage from its flood. So it's a gain, but flood it's not a working operation. It's not our main business, and this gain is unusual for us. So the answer is C, other income or expense. And the last one, 12, the company has decided to stop production of its candy divisions and suffered a loss of the sale of its division. The company closed main part of business, and result is removing from it, and to show investors that profit look in future. So the answer is D, discontinued operation, because it's result of company that has been closed. So it is the result of removing production of the candy, uh, that shows investors that profit will look different in the future. That's all. Thank you for your attention.